RBI released its biannual report on asset quality on Wednesday. The gross NPAs are at near decade lows for the industry. The system-wide gross NPA ratio came in at 3.9% as of March 2023, and RBI stress test projections show that NPL could further decline to 3.6% by March 24. So to talk about the banking industry, the loan growth, the asset quality, we're now joined by Sri Krishnan H., the Managing Director and the CEO at Karnataka Bank. So before we get chatting about your loan growth, which was subdued in Q4 and how it's picking up in Q1 and hereafter, just a quick word on asset quality. Your gross NPAs were 3.74% as of March. Where do you see it headed by the end of this fiscal year?
Good morning, and thank you for having me on this show. By the way, just to let you know that I'm just about 3 weeks old in the bank. I've just taken charge on 9th of June, and this is again non-Mangalore, non-Kannada person to take over. Reflects on how progressive the board has been and the bank has been. So just to kind of, it's not a disclaimer, but I just want to let you know that we do have our results coming up, which is the Q1 results. Same time next month when I'll be happy to be on the show to talk about the results. But in a short kind of an answer to what you asked, yes, the loan growth and the whole bank has been more traditional, and it has been subdued in terms of the growth compared to the market, and which is why there is a new management team that has been put in place. There is an executive director who's also new to the bank, and there is a whole lot of work that we are planning to do on repositioning and creating a new perception about Karnataka Bank to move away from a regional story to a national pan-India level story. If that gives you a sense of what we're doing.
Yeah, Mr. Sri Krishnan, congratulations on taking over, and good morning. Prashant here. Could you then, because the results are coming up and naturally you can't talk very short term, but talking slightly longer term smoothens sort of solves that problem. What's the vision, sir, for Karnataka Bank under you? In terms of, if you can just give us the big numbers that you want to get to.
So good question. So let me just tell you what we want to do. This is actually the 100th year of the bank. And as I walked in, we are actually having centenary celebration. So we want to do two things. One is that on the 100th year, we want to have a 100th year startup of the bank, which will be the new bank, more digital, more focused on certain segments, which primarily would be MSME and retail driven. What it means is that today we have regional focus, which is comprising of about 14 economic pockets. And out of that, about 7 or 8 are in Karnataka, and the balance 6 are outside of Karnataka. So we want to really grow the business across, rather than being very inclusive only to Karnataka. That's step number one. Step number two is to enhance the digital delivery and also a digital acquisition, which is a very big thing. So there is a sector focus. There is also a kind of a channel focus that we will bring about, which will contribute to two things. One is accelerated growth on the asset side, and this bank is known for traditional customer service, where customers actually swear by the branch service and the excellence that is provided. So which means that we need to capitalize on the inherent strengths of the bank. The inherent strength of the bank lies in credit evaluation and proposal, even at the branch level. So which means that a lot of automation and a lot of digitization that we can do to kind of enhance the bandwidth, as a result, enhance the volumes, and the asset growth and the CASA growth is something that, which will be a byproduct of all the efforts. So there is going to be the cash cow, which is the traditional bank running as it is. We are in the process of setting up a digital factory and analytic factory in Bangalore. And this would consolidate all of the tech operations, delivery, digital analytics, all put together. The bank would be far more outward looking compared to what it has been for the past 100 years. And while we celebrate our centenary, we'd also be kind of creating a startup and a complete sales culture, in the bank.
All right. Good morning, sir. You must be fresh in your role out here, but you have 4 decades of experience across the banking vertical. So, it'll be interesting to see delivery from here on. Give us a couple of numbers, though, if you could do that. You've clearly told us you want to expand geographically, and digital will be a focus as well for y'all. But I think the advance book is close to around 60,000 crores odd. How do you see this number growing? If you have a target, say, in the next few years, where do you see this advance number move to? Point number one. And also in the near term, that's for FY24, what kind of targets are you all working with, both on the loan book as well as on the NIMs, which were quite elevated for your low growth that you delivered in the past quarter?
Yeah. So two things. One is that, the asset growth, because of this effort that, we've just embarked upon, we would believe that, between MSME, retail, and a whole lot of other gold and agri loans, and that's one thing that I didn't talk about, because the bank has also got lots of strength on the agri. We have over 100 AFOs in the market. And this basically would result in anywhere in the next 3 years crossing the 100,000 crore mark, which is for sure. That is one. And that's a very, healthy gain. The second is that we need to be supported with some very good metrics on the liability side. And because of which, the healthy NIM, which it is, to sustain this at the same level is something that, we need to focus on. And over the last 2-3 quarters, I think, there is a significant improvement in the NIM. And we need to kind of at least maintain it at the same level. We are growing with the market, but not necessarily exceeding the market. And that's, I think, the fundamental change that we want to bring about, to say that there are those pockets where we can exceed the market in terms of the growth. So which will reflect on the numbers, both the asset as well as the overall balance sheet number. If that kind of gives you a sense of where we are.
No, but the NIMs, could you, just the final question before we let you go, the NIMs margin, I mean, the guidance, if you could give us a broad band, last reported number is around 3.87%. So what do you think it should stabilize at, given the, yeah, go ahead.
That was a little bit of an aberration because of certain, clear pricing decisions that were taken in the last quarter. That was even before, I had come in. But on a steady state basis, we would, think that, the NIM would settle between anywhere, because, as you're aware, the cost of deposits is always a challenge. And, that is something which is going to be, putting an impact on not only us, but all the banks. And so anywhere, a healthy 3.5 to 3.7 is what we would want to maintain. And I think we're quite confident on that.
We'll have to leave it there. Thank you very much for joining in. Wish you all the very best, in Karnataka Bank's century innings of 2.0. And we'll get chatting when you report your Q1 numbers. We'll slip into a break on that note. On the